Hi there, welcome to Kneppy Invest and welcome to another technical analysis update where I look at charts, charts upon charts upon charts. And in today's video, not much change in terms of what I'm going to look at in the first half of the video: indices, commodities, Bitcoin, and bonds. But I will be focusing on 1 hourly charts. I will show you some daily charts, maybe even some weekly charts here and then, but I'm focusing on the 1 hourly chart. And when you do look at 1 hourly charts, you can see a little bit of bearishness in there, particularly in the short term. Now, after I go through the indices, commodities, Bitcoin, and bonds, I'll have a look at 12 individual companies. All these companies are on the ASX, and I'm interested in these companies for various reasons, which I'll touch upon when I get to those companies and those charts. But first, let's start looking at the indices, and straight away, 1 hour chart for the XJO. And I'm becoming more and more a fan of 1 hourly charts. And I think possibly in my technical analysis world, I'll be focusing on 1 hour charts instead of daily charts. Definitely not 1 minute, 5 minute, or even 15-minute charts. And it seems like 1 hourly charts is sort of a nice in between the two, the daily charts and the really short-term charts as well. For daily charts and weekly charts, I'll probably look at those for my longer term positions, particularly quality companies. I think the long-term charts or the weekly charts are much more important because you want to weed out or get rid of that short-term volatility or that noise. But 1 hour charts, as I keep looking at these, over the past 1 year, I'm liking what I see. And you can actually see the power in the 1 hour charts and how it does really indicate trends, particularly short term trends. And for me, short term is anything less than, say, 6 months. It really indicates if something is in a trend or not, and whether it's soon coming out of that trend. And possibly a lot of the indices and a lot of companies are coming out of uptrends. That's pretty obvious of what we're seeing in the markets over the last few days. And this is the 1 hour chart for the XGAO. In fact, it's been in this 1 hour uptrend since, I'd probably say it would have moved or tried to start moving into the uptrend back in November. Yeah, definitely back in November. Before that, it was in a short-term downtrend, which was in a downtrend for a while, but it's been an uptrend. The way I decipher or decide upon whether a chart is in an uptrend is I just use these moving average channels. And if the share price falls below the longer term moving channel, doesn't mean the share price or the index is in a downtrend, because I want to see the shorter term moving average channel move below the longer term. So back here in January 2024, yeah, actually this year, we saw the XGO actually move briefly below the longer term moving average channel. And then the short-term moving average channel moved into the longer term and then started to pull higher. And we have seen that a few times as well. So I want to see reds, particularly lots of reds. And during this uptrend, you can see the XGO short-term and medium-term moving average channels were in uptrends. And sometimes the short-term channel was in a downtrend, but very short-term in a downtrend. But we have seen a little bit of sentiment change in the XGO, which is understandable. And the short-term moving average channel is definitely in a downtrend right now. Not only that, the longer-term moving average channel is starting to turn down, and I think it'll go red very soon. In fact, I don't see any way it won't go red. The other thing I would do is look at support and resistance lines. That's very important. So combine moving averages with support and resistance. And this dashed line for the XGO is an okay support level. It was resistance, now it's support. We saw it bounce off this level back in February. Nice little bounce there. And it also bounced off this level on Friday. In fact, it bounced off it. If I just decrease the size of my video there, it bounced off it at around about midday on Friday. Nice little bounce there. So, and I think one of the reasons why it bounced is we know, chartists know, that 7,500 is a support level for the XGO. Now, it's going to be interesting to see what happens on Monday. NASDAQ was down 2%. Nasdaq was down over 2%, but the Dow Jones was up 0.6%, and the Australian futures were up. So there is a possibility we might have a nice day, an okay day on Monday. Just a possibility at this stage, because even though the futures might be green, doesn't mean it will have a green day. But this is starting, or the XGO is starting to look a little bit more bearish. I'd like to see a little bit of bounce. And then if the XGO does fall below 7,500, I'd be actually a little bit more bearish. Now, this does not mean this downtrend will continue for a long time. It could be just a short-term downtrend, maybe for a few months. So if you go back in time, the last time we had a short-term downtrend on the XGO was between July and October of last year. The XGO fell from about 7,500 down to 6,700. Can't really remember that downtrend, but we had one. And then it moved back into an uptrend in November. And remember, that's the time where we thought interest rates were going to be cut 1,000 times in 2024. And of course, I'm being a little bit dramatic there, but I think it was Goldman Sachs I read. There was a comparison of all their interest rates cuts, forecast cuts in one tweet. And over like a 2 or 3 month period, they went from forecasting 5 interest rate cuts to 3. Now they're to 1 interest rate cuts in 2024. Anyway, so XGO looks bearish. Does all the other indices look bearish? Let's have a look at the small caps, the XSO. And yeah, so this is another beautiful uptrend that started in November, and no reason to be bearish at all during or from the period about November through to just like a week ago. So I would have started becoming a little bit more bearish. Yeah, start of last week. It fell below, the XSO fell below the longer term moving average on, looks like it was on Tuesday, down 1.5% on open. A nice little rally would have been on Wednesday or so, and down to a medium-term low. Last time it was this low was, looks like March, which is not that, actually it would have been February, late February, which is not that long ago. But just looking at the 1 hour trend, just like the SGO, this is starting to look a little bit more bearish, and the XSO really struggled to get above the resistance level at about 3,080. It tried to, but it failed. So if you look at the daily chart for the XSO, you can just see that is a very important level, around about 3,090. And how much could it fall? Who knows? But a really important support level for the XSO is about 2,600, which is about 300, 400 below where we are now. Anyway, so that's the XSO. It is looking bearish, short-term bearish, we'll call it, right now. Not long-term bearish, just a short-term. Could be a small correction, a fairly short correction at that. Now onto the NASDAQ. And just like the other two indices, this has been an uptrend since November. They all turned in November, which is understandable because, again, that's the time where we started hearing we're going to have 5 billion interest rate cuts in 2024, and the markets got excited. But you can sort of see a really nice uptrend, and it started to go flat. What is that line there? You can see it started to roll over, started like sort of a rounding top back during March. Got to about 18,400, struggled to get above that level, sort of like a double top here, and subsequently to the second top, which was the all-time high back on the 22nd of March, it really struggled to get above that, sort of rounding over, and then, yeah, it has just collapsed in the last week. It has fallen from 18,000 or above 18,000 to 17,000. In fact, if we look at the weekly chart for the NASDAQ, it has fallen 5.4% in the last week, which I would say is the worst week NASDAQ has had since, let's have a look, I would have said 2022, yeah, since October 2022, around 6% fall there, and that was actually signaling the bottom. So you can just see when the NASDAQ is in a downtrend, that's when we have the bad weeks. When it's in uptrend, yeah. The highest we've seen in an uptrend, I'm trying to find a really good week, 2.9%, 3.4%. Coming out of a downtrend, a little short downtrend here back in last October. I remember that was the last time we had a bit of a short-term downtrend. We came out of that downtrend with a 6.5% positive week. And I do actually see that a lot. when you come out of these short-term downtrends, that's when you have a really good week. And that could be the problem about selling out. You might miss that really good week coming out of the uptrend. Let's have a look at the daily chart at that time. So it would have been somewhere around here. Actually, let's go back to the weekly chart and just see exactly when that was. Where is it? Where are we? So that was the week of the 30th of October, 2023. So back to the 1 hourly chart. I should have looked at the weekly charts for the XGO and XSO as well. So 30th of October, there it is here, right at the bottom. That's when we had a really good week. And that was probably the signal of things maybe turning around. So even though the short-term, the chart wasn't in a short, the 1 hour chart wasn't in the short-term uptrend, that's when we had a really good week on the NASDAQ. So let's go back to the XGO and XSO. Just have a look at the weekly charts for these. So without doubt, it was a bad week. But in terms of how bad it was, comparison or comparatively, so the XGO down 2.8%, so nowhere near as bad as the NASDAQ. And we had a 2.89% down week in September. So it wasn't that long ago. In fact, yeah, 2.2% down in March. So these sort of weeks are not that abnormal. We have to go back to June 2022, my birthday, to see it down a fair bit, down 6.6%. In fact, it was consecutive weeks down 4% and 6%. And the XSO, I'd say this may be down 3.8%. So a little bit more than the XJO, but definitely the NASDAQ had a really bad week. This was, the worst week we've had for a while. But just looking at the weekly chart, still an uptrend. All right, so let's go back to the hourly chart and let's have a look at the Russell 2000. And just like all the other indices here, it's in a short-term down, at least a short-term downtrend. This could turn into a medium-term downtrend. It could turn into a long-term downtrend. Maybe the indices will fall for the next year. Don't know at this point in time, but definitely short-term downtrend for the Russell 2000. And yeah, it's the most bearish this index has looked since September, October last year when it was in a well-defined short-term downtrend, and then it came out of that start of November. Things turned around start of November. I'm pretty sure that's around the time where we got really excited about interest rates cuts. Now to the Dow Jones, and just like all the indices, this moved into an uptrend back in November, well-defined uptrend, and that uptrend, I believe, short-term uptrend has come to an end. We'll even say the medium-term uptrend is coming to an end. Dow Jones has fallen from 39,800 to 37,900. And let's have the weekly chart for both of these. Dow Jones. It says here Dow Jones only fell 0.1% during the week. Is that right? Yeah, that is right. Well, there you go. Dow Jones only fell, we'll say flat. It was flat. Virtually flat compared to the NASDAQ. So you can see all the weaknesses in the tech company, in the tech stocks. Nvidia down 10% on Friday. So Netflix down almost 10%. So that's interesting that an okay week for the Dow Jones, and the Russell 2000 is probably down about 2 or 3%. I'm predicting right now. Down 2.8%. There you go. Okay, so let's also have a look at the Nikkei, which, remember, was in the news not long ago because it reached an all-time high, and now this is starting to look weak as well. Starting to look weak in the hourly chart. I won't have a look at the long-term chart for this, but actually, no, let's have a look at the weekly chart. Probably the worst week for the Nikkei for a while, down 6.2%. The worst week since... Actually, this could be the worst week since COVID-19. I'm trying to find another one here. No, there was a week back in June, again, June 2022, where it was down 6.7%. It just looks bigger. Just looks bigger. But that was sort of in the middle. That 6.6% in June was just when it was going sideways. Anyway, can we have maybe a few other indices here? I have to go to my markets, and we can have a look at the FTSE. FTSE had a flat week as well, just like the Dow Jones. And I think if we have a look at the 1 hourly chart, this is not doing anything. Yeah, in fact, the 1 hourly chart doesn't look. It's not a downtrend. It's just a meh. It's going sideways. The Hang Seng, the 1 hourly chart going sideways, which is interesting because I saw the Asia ETF fell off a cliff the other day. So I thought maybe the Asian markets are down a little bit. And the DAX. So the DAX is more like some of the Australian and American indices. That's in a short-term or a medium-term downtrend. We'll say short-term at this point in time. Okay. Let's have a look at cocoa. Now, we'll have a look at cocoa later. Okay, so let's go back to commodities. So let's focus ourselves on commodities and continuing in this 1 hour mindset. So let's have a look at gold. Is gold look good? Does gold look good in the 1 hour chart? Yes, it does. It looks pretty good. In fact, it's looked good. It's been an uptrend since. So you get a different perspective. In fact, it's been an uptrend since February of 2024. I suppose that's not that long ago. And it broke out, beautiful breakout. You might have been not getting nervous at this point. It was just going sideways. So this wouldn't be a trigger to sell out. It wasn't in or moving into a downtrend. We had a similar scenario here about a beautiful uptrend since then and showing signs of maybe trying to go sideways now, but still in an uptrend. No reason to panic or anything like that when it comes to gold. I did read some posts on Facebook and stuff like tweets, stuff like that, saying gold's in store for a correction. But until you see correction, there's no point trying to get ahead of the crowd, in my opinion, because it's still an uptrend. There's no reason to sell anything. Sell your gold stocks. So gold looks pretty good right now. What about iron ore? This is an interesting one because I'll show you an iron ore company later, and this looks pretty good. So this is another reason, another reason I really like these 1 hour charts. It just shows you the change in trends much quicker than daily charts. So iron ore has been in a downtrend since the start of 2024, and it's pretty obvious it's now in an uptrend. It's turned around about a week ago, 2 weeks ago, in fact. Started to turn around, some big volume. I'm not sure how reliable these volumes are, but pretty big volume. When iron ore got to the bottom, I'm pretty sure I've mentioned that that's a pretty good sign when you see a really big volume coming in a downtrend. That could be a sign the bottom is being reaching, and that's true for iron ore here. Back when it got to the bottom in April, that signified the bottom, and now it's moving to an uptrend. So I'll show you one iron ore company, and because that looks like it is starting to move into an uptrend. So iron ore looks pretty good. I should have sold out of Appendix. I won't look at uranium because you need to look at line charts for that. Let's have a look at oil. Well, so oil is interesting. This one is so remember on, was it Friday? So Thursday, Friday, when there was the Israel attack against Iran, that pretty weak one, oil jumped up 2.8% in 1 hour, and then all those gains were lost over the next 6 or 9 hours. We went from $82 a barrel to 85.5, and then fell all the way back down to 82. In fact, went even a bit lower, 81.5. Might be double bottom here. So there's a bottom reached on Thursday at 81. It fell all the way back down to 81 on Friday, and we did see a little bit of bounce, but the bounce was fairly weak. So at this point in time, oil just looks like it's in a short-term downtrend. But if you look at the daily chart, you might get a different perspective. This could be just a correction. So you do get a different perspective. This could be just a correction in oil, although oil was down 3.5% on Wednesday. So we want to see a little bit of a rally. We need to see, or oil needs to see a rally and get above the highs we saw a few weeks ago. So that's oil. Won't look at lithium because that's you need a line chart for that. What about copper? This should look fairly bullish. Well, this is a good looking chart. Good looking chart, copper. Nice looking chart. I'd no reason to sell out of your copper companies right now. So Sandfire, Aries Resources, 29 Metals, Hillgrove, probably a lot of other ones out there, Explorers as well. Coal, let's have a look at coal. Okay, coal, it's just going sideways, trying to break out. I did notice there were some interesting charts for some of the coal companies. I think the bottom has been reached for coal. It's hard to read on this one. And let's have a look at some of the other. So we can have a look at, what about nickel? I thought I was thinking you might need, no, this is the Nikkei, sorry. I keep making that mistake. Nickel NI225 is not nickel. What's nickel? Silver. Let's have a look at silver. Silver should be pretty good. Oh, okay. Well, it's going sideways. Sort of consolidating. Still in an uptrend, but sort of going sideways. We need to see it broke out above a resistance level back on the 13th of April, so just over a week ago, and is struggling to get back above that level. You can see it rallying to that level, $29, and always pulls back. So that was a false break, and I'd be very interested to see because it has been talked that silver lags gold, so gold's been a beautiful uptrend. So we need to see that with silver. And if I do see silver break above $29, there could be a few silver mining companies on the ASX, Adriatic silver mines, that might be interesting plays here. There has been a complaint of a dearth of silver companies on the ASX, maybe even in the world. And there's nickel. I said spelt out nickel. And you do need a line chart for this, but it was tin, but nothing really exciting about nickel. In fact, according to this, it's in a downtrend. What's happening with nickel? It's collapsed. Is that right? Let's have a look at the line chart. It collapsed on... Yeah, okay. So nothing exciting with nickel. I'll go back to... That's the daily chart. It was weird. This 1 hourly chart is completely different. So don't look at this 1 hourly chart for nickel. Focus on the daily chart. You get a completely different... This looks pretty good. Anyway, so a little bit of a bug, it seems like, in TradingView, where the Nikkei 1 hour is completely different than the daily chart. There was an absolute collapse in the nickel prices. You don't see that here. Okay, and let's go back to candlesticks, and we can have a look at palladium. Why not? Oh, it's doing nothing. I'm trying to think of a palladium company on the ASX. I can't think of one just now. Tin, there are a few tin plays, and again, we need to look at the 1 hour chart for this. Not the 1 hourly chart. Oh, go back. We need to look at the line chart for this one. Tin looks good. Oh, I should have bought some Metals X. Tin looks pretty good. This is definitely broken out. Beautiful week. It's gone up quite a bit. And copper. Let's have a look at copper. We'll stay with the line chart. I keep seeing tweets about cocoa still moving higher. Hope you bought some cocoa futures about 6 months ago, because you are probably a rich person right now. It's increased fourfold over the past 4 months. Okay, so that's all I've got for the commodities. Let's have a look at Bitcoin and bonds. And we'll go back to the 1 hourly chart. Should I show Ethereum as well? Maybe I'll show Ethereum as well. Okay, so this is the 1 hour chart for Bitcoin, and not surprisingly, it's just doing nothing for me. There's no trend. It looks like there was a short-term trend, downtrend, but there has been a little bit of a bounce. But this is a trendless thing right now, just by looking at the 1 hourly chart. In fact, it's been trendless for a while. So no significant trends in there, some short-term, very short-term trends. So you might, if you look at the daily chart, you can just see it going sideways. Yeah, daily trend just going sideways over the past, we'll say, really over the past 2 months. And Ethereum probably is not that different, I would assume. I'm assuming Ethereum won't be much different. Well, a little bit more bearish. And it is bouncing off the longer-term moving average. This is the daily chart. It is bouncing off the longer-term moving average chart. You can see these one-day candlesticks, some shadows below the main body, which is an indication of buying. And we've seen quite a few of those. And it doesn't mean that is the bottom, because all those buyers might have been bought out. Not bought out. Maybe depleted, I suppose. And if we see a continual supply of Ethereum on the market, we might see Ethereum go lower, below, we'll say 3,000. Seems like 3,000 is a nice little support level for Ethereum. But if those buyers are being depleted, Ethereum could move below 3,000. 1 hourly chart for Ethereum. So this is a little bit different than Bitcoin. This is starting to look interesting just by looking at the 1 hour chart. Maybe a bit of a trade for Ethereum just based off this. And you can see there was sort of a trade in Ethereum back in early April that did not play out. So these potential plays don't always play out. You do get false breaks like we see in Ethereum back in early April, but you just sell then. If it doesn't play out the way you think it, you just sell. And wouldn't have sold much of a loss, if at all, with Ethereum. Not sure how to trade. I do have some Bitcoin, but I'm not sure, because I'm pretty sure there's a fee if you sell or buy. And it's a pretty high fee, I think. Okay. And then let's have a look at bonds. And I think this is going to look pretty bullish if your bond yields, if your bond prices, or like a bond TTF, it's the complete opposite. So that's what I'm thinking right now. This is 1 hour bond yields. It looks pretty good. It's an uptrend. 1 hour uptrend. Got to a high in the 16th of April. Has pulled back a little bit, but that's not an end into the uptrend. It's just maybe a little bit of a pullback. We've seen those before with bonds quite often. In the daily chart, let's have a look to see if it's in perspective. No, the daily chart even looks more bullish. So yeah, this is just telling us, the bond market is telling us that, wait, interest rates or inflation is going to be a little bit more sticky, and the 1 trillion interest rate cuts we're going to get in 2024, more than likely it's not going to happen. So interest rates would fall to negative 1,000%, which would be interesting. And do I have to show you the TLT, which is the ETF, bond ETF, that's in the downtrend? In fact, it's even in the daily downtrend. So the 1 hour is going to look pretty ugly as well. Yep. Okay, that's all I've got for indices, commodities, bonds, and Bitcoin/Ethereum. Now on to the individual companies. I think I've got 12 companies here. Those 12 companies are Dominos, Tyro Payments, Avita Medical, Light & Wonder, Air New Zealand. Can't remember why I've included Air New Zealand. Betmakers, I know why I included that one. Weebit Nano, Lynas Resources, SSR Mining, Nanosonics, Chrysos Corporation, and Mount Gibson. Like these charts for various reasons. Doesn't mean they're bullish charts. Doesn't mean the share price is in a bull run or whatever you want to call it. But I like these charts for different reasons. So let's start with Dominos. It's been the wars lately. So what I'll begin with is I'll have a look at the 1 hour charts for all these, and then also have a look at the daily charts, maybe even weekly charts to finish up with. But this is the 1 hour chart for Dominos, and it has been looking ugly for a while. There was that down when they released their, must have been a trading update, the 25th of January. There was that big down day. And then it looked like it was trying to get into an uptrend back here. So in late February through to middle of March, and I was trading Dominos at this point. In fact, I bought on this massive dip, and then I sold out around about here. No, actually would have been here. A nice 10% profit. Based off the 1 hour chart, I'm not sure I would have done that. But it was trying to move into a short-term uptrend, 1 hour uptrend, and then failed. And then, yeah, there's no reason to have been excited about Dominos. And then they had a investor presentation or strategy day, and the market didn't like it. That's why share price has fallen. But you'll notice I've got this dashed line. And usually if I have a dashed line, maybe not usually, always when I have a dashed line, not a dotted line, but a dashed line, that is an area of support or resistance. And look what's happened to Domino's Pizza. Right on that line, it's bounced off it perfectly, almost perfectly. But the bounce was fairly weak. So what I'm looking for here is volume. And you can see the red bars, or the volume bars, are much higher than the green bars, which means there's a lot more selling, more ferocious selling than the buying. So what you want to see is when the bounces, you want to see really high volume coming in. And the volume actually dried up, got lower during that bounce, which means it's not going to last very long. It didn't last very long. And the share price since then has just been meandering around. So why is this level very important? So to really understand that, let's have a look at the daily chart. Might have to have a look at the weekly chart. Yeah, have to have a look at the weekly chart. All right, so I have a few lines here. In fact, I'm going to get rid of this line, which is the COVID-19 bottom, and I'll get rid of this line too. So I'll just have one line here. So this is the long-term support level for Dominos. It goes all the way back to 2018 and 2019. So back then, the share price was in a short-term downtrend. Also, we'll call this a medium-term downtrend. Share price rose to a high in August 2016 of $76 and then fell away and went down to $36, $38, so halved. And then you can see the share price was struggling to get to new lows. It got to a new low just in August 2019, and that was it. Then share price moved into a really nice uptrend. So those are the lows at around about 30, we'll say $36, $37, we'll say. And that's what the market remembers. The market remembers that was a low back then, and that's why the share price bounced. But it was a fairly weak bounce. And if you do look at the weekly chart for Dominos, it's looking ugly. You'd see these really big down weeks, quite a few big down weeks during this period, starting with 1st November 2021, down 13.7% in a week. And we can see 1, 2, 3, 4, 5 down weeks in a row. And just telling us that Domino's experiencing some troubled times. And the market doesn't like what they see. And yeah, by looking at this, share price is in a long-term downtrend, but we could see a bit of a bounce off $37, just like we saw here. And maybe that is the bottom for Domino's. But even falls through $37, we'll say $36.50, even falls through that level on strength, that will be very negative moving forward for Domino's Pizza. So not trading this, but I do own Domino's Pizza in my quality portfolio. And that raises another question. Is Domino's Pizza a quality company? I'm not sure anymore because they are struggling. Now, fairly similar theme to Domino's, we have Tyro Payments. Right. In fact, I probably prefer Tyro Payments over Domino's Pizza, the chart anyway. Now, again, we have this dashed line. Share price of Tyro Payments has been in a short-term downtrend since March. It's fallen from $1.10 all the way down to 86.5 cents. And it's sort of, the downtrend has sort of accelerated in the past week. And share price now at 86 cents. But we have this dashed line at 85 cents. So again, just like Domino's Pizza, let's have a look. Instead of looking at the weekly chart, we'll have a look at the daily chart. I think this should capture why this level is important. It's because we saw share price of Tyro bounce off 36 cents back in October last year, when the overall market got to a bottom. So that's very important. The overall market got to a bottom, and then we saw the markets rally, and that's when Tyro Payments share price rallied. So we're at the same point with this company. Even though the overall market is at a much higher level, Tyro Payments is not. Now, if we even go back further, let's have a look at the weekly chart. There is another low to be interested about, and that is the lows we saw back in June 2022, again, when the overall market was at its weakest. Now, look at the weekly chart, still in a downtrend, and we're well off the all-time highs. In fact, just by looking at this, you can tell there is a significant resistance level right there. It got to, the share price of this company got to 440 4 times and failed to get through, and then just fell. Anyway, so 60 cents is a very important level for Tyro Payments. Maybe even more important than 60, was it 65 cents or 86 cents, sorry. So that's why I am having a closer look at Tyro Payments, just to see if it does bounce. Could bounce off 86 cents or 85 cents. And I wouldn't be surprised if it does that. And again, I'd like to see some higher volume coming in. So let's have a look at the daily chart. Is there any high volume coming in? We had a week of high volume, but not massive volume. I'd like to see some really good volume coming in on the 1 hourly chart. That could signal to me that the bottom is possibly being reached and we might see a bounce. And I wouldn't be surprised if it does bounce. You might get a 10 to 15% rise if that happens. And I played that strategy a few times now in the past year successfully. I think successfully. I can't remember of one time where it hasn't happened. The only time where I didn't profit from it is when I got a little bit too greedy, but the share price bounced 15 to 20%, and I should have taken profits, but I didn't. I think that was Accusensus. Okay, Avita, staying on the same theme of share prices in downtrends and share price maybe not collapsing, but you can't say that's not the case for this company, Avita Medical. So this is the, in fact, it's fallen through the important level. So Avita Medical released something on last Thursday, the 11th of April. The market didn't like it. And then it keeps dropping. Just keeps dropping every single day. Let's have a look at the daily chart. Just look at that drop. Massive volume. Huge volume coming in for Avita Medical. You can't discount that volume. This is fund managers getting out. That's the only thing that's happening right now. Fund managers are getting out there, just dumping. That's why the share price is collapsing. They just continue to increase, not increase, but continue to put supply of Avita shares onto the market, and there's not enough demand, and that's why the share price keeps falling. However, I thought this line, which was the lows we saw back in October last year, again, just like Tyro, that low could have been a nice little support level for Tyro Payments, but it's fallen straight through that on a Friday, again, on big volume. So that could be an unfortunate breakout, a negative, sort of bearish breakout for Avita Medical. I can't remember the trading update. Was it a trading update? Must have been a trading update or something. And yeah, this chart looks pretty ugly right now. This is the daily chart, by the way. And what's the next support level? I don't know. Maybe here, which was the old breakout we saw back in early 2023, which was $2.30. If that doesn't hold, who knows how low Avita Medical could go. So even the hourly chart looks pretty negative. No end in sight to the volume. You can see these massive spikes. Huge spikes each and every day on open. So they're just dumping on open. And even on Friday, there was a big spike on open, but not quite as big as the other day. So yeah, someone's just dumping on open, looks like. And you can see on open, the share price has just fallen each and every day. If we don't see that again on Monday, maybe that's the time to maybe, just maybe, think about buying a bounce. I think this will bounce because I would have no doubt this is oversold right now. You probably see that RSI. Maybe I'll just put RSI in just to show you. Yeah, this has been oversold for a while, in fact. It's been oversold ever since the first day where it sold off. This is just negative sentiment, just consistent selling. And again, I wouldn't be surprised to see a bit of a bounce when it comes to Avita Medical. Okay, Light and Wonder. We'll have a look at the daily chart for this one first. A beautiful uptrend. And you can see a beautiful wave-like pattern. So if you just look at the line, so this is, I don't like to look at line charts, but you can just see it up and down, up, down, up, down. So possibly we're at the point where this down cycle is coming to an end. However, Light and Wonder, I'm pretty sure it's like a tech company, like a gambling tech company. It could be completely wrong. Is a cross-platform global games company which engages in the development of content and digital markets. So I'm not sure if you would consider this company a tech stock. And the reason I'm saying that is there is a possibility that some of the tech companies on the ASX will see a bit of pressure on the share price. And that might be true for Light and Wonder as well. But I'm just saying that the share price has dipped. I just remember the last time the share price dipped back in January, share price got to about $116. And I saw that dip and I was thinking, oh, I should take a position in this dip. So that's why I'm following this. But the share price has just gone straight down from $168 to $132. What hourly chart? Step-like pattern down. And I think that's just following what's happening on the NASDAQ. I'm pretty sure this is dual listed. So yeah, so short-term downtrend right now. Sort of like we saw back in late 2023, early 2023, and then share price recovered quite nicely. So definitely one to keep an eye on, in my opinion, just for me, maybe not for you. Okay, Air New Zealand. I don't know why I've included Air New Zealand, but I've definitely included it here for some reason. Share price has just fallen off like a rock in the last, this is the hourly chart, by the way. So it's moved into a short-term downtrend. Without doubt, that's a short-term downtrend. Maybe we realize why I've included Air New Zealand in this chart for. Okay, yeah, I can see why. Okay, so we saw the share price of this company reach a low in, again, June 2022 of around about 50 cents. And it struggled. It really struggled around 50 cents and then started moving higher. So that was a low back then. Not the absolute low, but we'll just say 50 cents was a low for Air New Zealand. The share price is 52 cents. So I can understand why I've included this. This is just me thinking it's getting very close to that 50-cent support level. Yeah, so Air New Zealand, a possible trade and a possible bounce. So I wouldn't be surprised to see this company share price move back up to 70-cent range. That would be a nice little profit, 40% profit if it does that. Big if, big if. And possible value at these levels, I don't know. I don't like, would never, if I had $1 billion, I would never buy an airline company. No way would I buy an airline company. What's a market? 1.7 billion. If you look at the profit, the last year profit of, come on, show me the profit. Profit of almost $400 million, which means the PE ratio is quite high. I mean, quite low, I mean. PE ratio 5.99, dividend yield 3.5. So maybe value investors will think about buying this company when it gets to 50 cents. Maybe. Okay, on the flip side, we have Betmakers. This is looking interesting. So long term, this is the daily trend. So I said I was going to look at or focus on the hourly chart, but this is the daily trend showing that Betmakers has been a long-term downtrend. So during this period, maybe you do short-term trades. You can see there have been bounces. So back in June 2022, share price bounced from 30 cents back up to 50 cents. So that would be maybe an hourly trade, short-term trade. That's it, because a long-term trade, not there because it's been a downtrend, unless you could short it. But things are turning around for Betmakers. Share price starting to go sideways. And we have seen share price rally in the past week on some pretty good volume. And on Friday, I think the share price has broken out. The last time share price was this high was back in August last year. I don't remember this company releasing any financial news. That's probably the only thing I can think of why this wouldn't look as bullish. And then the 1 hourly chart looks pretty good as well. 13 cents and some good volume coming in. The first sign of maybe a turnaround was back in late January, early February. You can see some increased volume as the share price rallied, and that volume dried up, share price pulled back, and now another rally in the share price and some good increase in volume. So let's go back to January, February. Just look at the daily chart. So there's that rally, that initial rally, and it petered out. That was the first sign of maybe the bottom being reached for Betmakers. So yeah, probably not a company for me, and one of the reasons why it's not profitable. Market cap 125 million. Last year, revenue of 95 million, profit of -40. But I don't follow this company too closely, and maybe they release some really positive news. Let's have a look. Betmakers, or something went wrong. That's why. Logs you out after a while. Betmakers, have they released anything to understand why the share price has rallied? Amendment of beta agreement. Oh, that's right. They made an acquisition or something. Maybe. When was that? That was the amendment of beta agreement, head of beta acquisition. When was that announced? Anyway, things are turning around just based on the chart for Betmakers. Now onto Weebit Nano. I think Weebit Nano is fairly similar to Avita, Tyro, and Dominos. I think, if I remember correctly. Yes, it is. This is a daily chart. So it's been in the channel for a while. The top of the channel is quite obvious. So $4 or just about $4.50. It's reached that level 1, 2, 3, 4 times and has struggled to get it past that. And then we saw the share price of this company get down to about $2.80 back in October last year, and is at that level right now. And maybe there's a bit of a bounce on Friday, just based off this one-day candlestick. Let's see if that's true. The 1 hourly chart, yes, that was a bounce off $2.80. Perfect bounce. Not only that, I mentioned volume. Look at the volume coming in. So this is a perfect technical trade here. Share price got to the lows we saw back in October and increased volume over a 5-hour period. In fact, if you look at the daily chart, there should be really good volume on that day. Yeah, it's got a red, it's got a colored red, the volume, but that's just because the day was down. But when you look at the 1 hourly chart, you get a bit of a different perspective. The share price was down for the day, but we did see a bounce. Bounce in the hour where the share price hit the support level, the bottom of the trading range, and has bounced. I'd like to see the bounce continue on Monday, but a potential trade here, and fairly low risk trade as well. So we could see a bounce, a fairly big bounce in this company. share price could go back up to the top of the range, and you're talking about over a 50% gain. And if the share price breaks below 280, that's an obvious sell. So not much of a loss there. So the risk reward in this sort of play are pretty significant if you do look out for the signs. And the very fact there has been volume fills me with, I could trade this. I could trade this. I could see myself taking a short-term position in Weebit Nano just based off this chart. Okay, so the next 5 companies are all companies that are looking promising just based off the 1 hourly chart. Starting with Lynas Resources. And this has just turned positive. And the other thing is, so we're going to look at the weekly chart. I've got this line there. Oh, that's the lows we saw. Oh, that was a support level that was broken. And I've just continued that level on. So I'm just going to go like that. And share price has gone back up above those levels. That's really good. That's the daily chart, but the 1 hourly chart. So I wouldn't necessarily be excited with this just yet based off the hourly chart because there is a downtrend here. You can see share price has moved to this downtrend line and it's pulled back. 1, 2, 3, 4. You can't really count this because that was a start. But 1, got close here, 2, and will it do it again? But based off the 1 hourly chart, maybe you could get excited. So maybe this is starting to look interesting just based off the 1 hourly chart. But there is resistance just above this level. So I like to look at resistance and the trend. So I'm going to combine the two from now on. So that's one of the reasons why Lynas may not be a short-term play here, just because there is a resistance level just above it. And you could buy at $6.30 and then sell when it hits the top of this, gets to the, or tries to get to the trend line. And they maybe hope it gets above the trend line. That could be evidence that Lynas Rare Earth is moving into a medium-term uptrend, maybe even a long-term uptrend for this company. I've tried to trade this company in the past, won't say unsuccessfully, but I think there is potential that this company is starting to look a good value. Okay, so that's Lynas, 1 hourly chart. Let's have a look at SSR Mining. So remember that was that was a mining disaster in Turkey. So the share price dropped 50% on the 14th of February. Happy Valentine's Day. Continued weakness just based off the 1 hourly chart from then all the way through to about March. So it took a long time for that weakness to play through. But we are starting to see a little bit of rally in SSR Mining. This is a gold company, so it's understandable. We have seen share price of this company starting to rally, not as much as some other companies. But just based off the 1 hour chart, it's starting to look more interesting and starting to move into 1 hour uptrend. SSR Mining, and just based off the valuation of this company, you might be able to see some value. I have no idea, haven't been following the story about the mine in Turkey. But if everything's okay now, maybe this is just the market getting or overreacting, and you could be buying this mining company for much better value. Market cap 1.7 billion, dividend yield 5.3%. But again, all this is just based off what might happen in Turkey. That Turkish mine. Nanosonics. Now, this is not looking absolutely positive. This is not a breakout, a 1 hour breakout, but I think possibly the downtrend in Nanosonics is coming to an end just based off the 1 hour trend. So they released something negative in January, trading update. Share price dropped 31%. And share price hasn't really moved into a well-defined downtrend from there, sort of going sideways, sort of drifting lower. But we are starting to see signs that the downtrend, even though it's not really been a downtrend, but the downtrend from before they released the announcement. But if we start to see the share price starting to move up, say get above $3, that would be positive for Nanosonics, particularly looking at the 1 hourly chart. Now, if you look at the daily chart, you get a different perspective because that particular announcement just completely destroyed sentiment in this company. So if you look at the daily chart, I would say no, not yet, nowhere near yet. But again, different perspective, looking at different time frames, I could see a trade here, a short-term trade, maybe. So that's why Nanosonics is, I'm going to be following this company a little bit more closely. Even though I do own this company in my quality portfolio, and again, just like Domino's Pizza, we have to question whether Nanosonics is a quality company. But this is more of a long-term play. But I'm willing to trade this. And the way I might play this in the future is when I trade a company that I own in my quality portfolio, I'll take the profits, or maybe 50% of my profits, and put those shares into my long-term position. So that way I build up my longer-term positions or quality positions in those companies. So for instance, Nanosonics, if say I make $1,000 profit, take $500 of that profit, and then put the other $500 of shares in Nanosonics and put it into my quality portfolio. And that way I can just build up my quality portfolio over time. Okay, so Nanosonics not looking absolutely great like some other companies, but I think the starting to look more interesting because we're starting to see a squeeze in the moving averages. And that's what I look for a lot of times, just a squeeze in the moving averages. Same thing I think is true for Chrysos. So I actually was a shareholder of this company, and then I sold, took nice little profits, and I'm just waiting to see if there's giving me any sign of that I should buy back in. So the daily chart looked really good, beautiful uptrend, the daily chart. Then share price fell a fair bit. That was sort of the end of the uptrend. And now the share price is going sideways. So why is that important? Share price going sideways when the overall market is weak. That's a sign of general or overall strength in that particular company. Even though the share price is going sideways, there is strength in this company right now because it's not falling when the overall market is falling. So what I'd like to see now is just signs of an uptrend in the 1 hourly chart. I'm not quite seeing it just yet. I'd like to see the share price get above $7.10-20 for that to happen. But definitely, I'm following this a little bit more closely now. Yeah, putting into my buy Australia, which is companies I'm closing or charts I'm following a little bit more closely on a daily basis. And the last company in today's video is an iron ore miner. And that's Mount Gibson. Again, I've traded this in the past because of this beautiful chart. This is the actually daily chart. Let's have a look at the daily chart. I thought this was a good sign. I thought this company is cheap. That's another reason why. But then I saw a little bit of weakness in Mount Gibson and I sold somewhere here. So I bought here, sold here. But remember that strength in iron ore. And we started to see that in Mount Gibson. It does look like the 1 hourly chart is turning around. A little bit of a dip in last day. And I think we do have a higher high and a higher low. So Mount Gibson looks pretty good right now. Maybe not as good as some of the other iron ore miners, but I do think there is an argument that this company is possibly undervalued. Probably the only negative thing might be the mine life of their mine. But price earnings ratio 4.2. I think that's a little bit low. Anyway, that's all I've got for this technical analysis video. If you have any questions, any thoughts about any of these companies I have showed you in today's technical analysis video, or maybe the commodities or anything, I'd love to hear your opinion. So leave those in the comment section of this video. And I will answer any question or reply to any comment you say in next Saturday's answer and replies video. So look out for that in 6 days' time. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.